What will be the impact of recent global developments on Indian stock market?
The recent downgrading done by Standard and Poor to 9 Eurozone countries seems to have already discounted in the Indian market, because today on Monday market is not showing any kind of shakiness or nervousness. It is flat, and so I think it has been the Eurozone trouble or downgrading seems to have already been factored in. Moreover, last week we had a positive trend in the market. Market volume was decent, and we saw a lot of positive trends in the mid caps, which would have given a lot of comfort and confidence to retail investors. So the mood of the Indian market seems to be on a positive trend at this point of time.
How retail and institutional investors' response is expected in the near future?
Institutional investors, when you talk about foreign institutional investors, in 2010 they brought in around $29 billion. In 2011 they pulled out around 26,000 crore, which is a fraction of what they brought in 2010. But that made Indian market not nervous. In 2012, I believe the allocation by foreign institutional fund managers would be on a higher side, because they have seen Indian market and Indian economy withstanding the global turmoil. Though our corporate results are showing some strain on the profitability, the top line growth is still intact, and once we are able to control the inflation and rupee becomes slightly more stable, I think the balance sheets will look much better in Indian companies, which should attract more institutional investors' money from overseas. And as far as retail investors are concerned, at this point of time, bank interest rates are quite lucrative, safe zone. India being one of the highest savers in the world, 36% of the savings ratio, majority of that goes into bank deposits when you look at the financial investments. So taking money out of the bank deposits into other investment channels like equity and direct equity and mutual funds becomes a challenge when the interest rate is so attractive. But certainly once the market trend remains positive for some more time and better results from the companies would certainly attract retail investors back into the market. So I think 2012 you will have a mixed reaction from retail investors because of the high interest rate prevailing in the market.
What is your view on interest rate forecast?
Interest rate cycle seems to have peaked out, because if you see the latest WPI numbers in December, it has come down to 7.47%. And if you compare it with the entire WPI numbers in 2011, which was hovering around 9%, I think we have successfully brought down the inflation numbers, and especially the food inflation is really on a downward trajectory, which should give a lot of comfort to the policy makers and decision makers. Therefore, I believe that the policy review meeting by Reserve Bank of India on 24th of Jan would be considering some kind of rate cuts. So I think we are on a downward cycle as far as interest rate is concerned.
Thank you.